Okay, we're going to do the Flack ink one, so if you would print off this and try it yourself before you watch me do it to see how far you get. Okay, so the first thing I'm going to do is make an increase-decrease column, and again, make this on your worksheet right here. I made it over here. Don't do it over here. This is a very bad place. It's just hard for me to write on this, so I'm going to go over here. I'm going to cross them off as we get through. Okay, so the first thing is I need Flack ink, cash flow statement for the year ending, and I need operating, investing, and financing activities. The operating section, the format is net income, add back depreciation and amortization, adjust for gains and losses, so I subtract gains, add losses, and adjust for current assets and current liabilities. If a current asset increases, I subtract it. If a current liability decreases, I subtract it also. So current assets go the same. Current assets go the opposite way as cash. Current liabilities go the same way as cash. Okay. All right. So now notice the first thing I look for is an income statement, and I don't have one. So now I need to go through these. So investments were sold for $105,000 cash. I'm going to write investing next to that. So I'm going to let you do that. I don't do a very good job with this cursor. Equipment and land were acquired for cash. That's an investing section. There were no disposals of equipment during the year. That's really no place, but investing. Common stock was issued for cash. That's financing. There was a $50,800 credit to retained earnings for net income. Yay, that goes in the operating. And there were $36,000 debit to retained earnings for cash dividends declared. Okay, and cash dividends goes in the financing. Okay, so now I'm going to start out with net income, $58,140. So I'm going to put that right there. Okay. Oh, and before I start, I also do a retained earnings statement. So a beginning retained earnings, so this is 12, this is 13, of $451,620. I add net income, subtract dividends, and get end of the year at $473,760. I'm given net income, so I plug it there. I can back into dividends of $36,000, but in this case they tell me it, but I can prove that. So notice that I have $58,140 of that taken care of, and when I get done with the dividends one, I forgot to type in these things. So this one is accounts payable. This one's accrued expenses. Whoops. This one's accrued expenses. This one is dividends payable. This one is common stock. This one is paid in capital. And this one is retained earnings. Okay. So of my $22,140 change in retained earnings, I got $58,140 accounted for. Okay. I add back depreciation, but since I don't have an income statement, I need to go figure out accumulated depreciation. The change in accumulated depreciation is $6,900. However, that is not a guarantee. Accumulated depreciation, think about your entry for depreciation. I debit depreciation expense and credit accumulated depreciation. Okay. However, if I sell assets, I get the equipment off my books with a credit, and I get the accumulated depreciation off my books with a debit. So I have to see if I have any asset sales, if I have to adjust for the accumulated depreciation. And this is where C comes in. So this is really important to me. So I've got E taken care of. I'm all about crossing off things I'm done with. I don't care if you do it like that. Okay? And this says there were no disposals of equipment. And what that means to me is my change in accumulated depreciation is my change in my fixed assets, or is my depreciation expense. So I have that, and that means I can go delete this. Okay. Then I adjust for gains and losses. So again, I look through my income statement. There is no income statement, so I'm going to go look through here, and it says investments were sold for $105,000 cash. So again, I'm going to try to do this. I debit cash for $105,000. Okay, and you may say, I'm going to go ahead and sale of investments and put that, and you certainly can. Okay, but I'm going to look here And notice that investments went from 90,000 to 0. So I must have credited investments for 90,000. Okay, so if I have a debit to cash of 105 and I got them off my books for 90, I must have a gain. And gains are credits, and so my gain on the sale of investment has to be 90,000. It's got a balance here, minus 105 or vice versa, so I have $15,000 gain. Okay, and you should know how that all works, so that should all be a review for you. Okay, and so there's my gain of $15,000. All right, and I can go ahead down here and put sale of investments, either that or I would have probably just circled that when I get down to investments. But I want to show you something. Look, 105 minus 15 is this changes in investments of 90,000. So 105 minus 15, I'm going to do it like I did in the other problem. 105 minus 15, I've got my 90,000 taken care of. Okay. Then I have no losses here, so I can actually cross off this one too. Whoops. Okay. And now I'm going to do my current assets and current liabilities. Okay. So cash I skip, but accounts receivable, and I'm going to go back over to here because of my change. I don't necessarily pay attention to the direction always. But I see that my accounts receivable went up. So if accounts receivable went up, I subtract it. So I'm going to change that to yellow, and I've taken care of accounts receivable. I see inventory went from 231 to 240, so it also went up. So I'm going to subtract my inventory. I have investments, but they're non-current, land, etc. So I'm done with my current assets. I go down to my current liabilities. I have accounts payable changed by 7320, and I see it went up, and current liabilities go the same direction. They go the same direction because if accounts payable went up, I have more cash because I haven't paid them yet. So my cash is high since I haven't paid them. My next one are accrued expenses. So accrued expenses changed by 3,900, and it went from 19 to 50, so it decreased, so I subtract them. Okay. And my next one is dividends payable. But remember, dividends go in the financing section. Okay, so now I know that I declared 36,000 from there. Okay, and this is where I don't do the change in them. I simply logic my way through it. Okay, in my beginning, I had $7,200 of dividends payable. Okay, those were declared last year but paid this year. So I need to add those. So I declared 36,000, but I also paid some last year's of 72. And I had 9,000 at the end of the year. So of this 36, 9,000 have not yet been paid in cash. So some people prefer to subtract the ending first. So I declared 36,000, but I haven't paid 9, so I need to subtract that out. And then last year's that was paid in this year is 72. So these will always go the opposite direction, but take a little bit of time to think through which one is a subtraction. Declared 36, but of the 36, I haven't paid 9. And these will be paid next year in cash. So these were declared last year, but paid this year, so I add my 72. So I end up with my dividends paid of 34.2. All right. So if I take into account, I'm going to jump right to here, although I probably would have done it later and just wrote financing. But notice it's 34,200, and that 34,200 is simply this 36,000 and this dividends payable here. So I've taken care of it, right? See that difference right there, okay? Then the next thing I have is I'm done with the operating section, so I just add those down. I get to the investing section. I've already done sale of investments. It says equipment and land were acquired for cash, so I'm going down to equipment and land. So land went up by 123,000, so I have purchase of land. So I've got cash went out the door if I purchased it, so I can delete that. And I have purchase of equipment because equipment went up from 207 to 264. So I have $57,000 of equipment. Cash goes out the door if I buy it. So now I'm done with my investing section. I've already done the dividends in that. And so actually I've gotten retained earnings taken into account because the 58,140 up here, and I accounted for the 36,000, so I can delete that. So the only things I have left are cash, common stock, and paid-in capital. When I sell common stock, I debit cash for the amount, and I credit common stock for par value and additional paid-in capital or paid-in capital for the amount. So this changed by 12,000, this changed by 75,000, so I can back into the cash, which is a change in both of those. So notice it's 87,000. So right there, I've put sale of common stock, and I've accounted for both of those changes. Okay, so I have operating, investing, and financing. Add them together. That's 14,940. There's my check figure. I'm all good. Then I take my cash at the beginning of the year from here, add the 14,940 and the 9,219 to make sure I get my cash at the end of the year right there, and I am done.